Welcome to Prediction Market Movers. My name is Chris Gerlacher. I'm here with Prediction News, and today we're talking business. We've got a great investment banker here to tell us about, what the Novig acquisition could look like, or maybe not look like, whether Kalshi or Polymarket are really interested, and what the shape of that could be if they are, and what acquisitions more broadly could look like in the space. Once Kalshi and Polymarket are done with the badge wars on X, we're going to start seeing acquisition wars, and we can get a shape of what that'll look like over the next few years. If you're here with us, give us a like, subscribe to our YouTube channel at Prediction News, and follow us on X at Prediction News. Now I want to bring in Joel. Joel, thanks so much for being here. When I reached out to you, I had a whole theory about, what the Novig deal could look like. What's your take on the rumored approaches to Novig from Kalshi and Polymarket that were floating around at the end of September?
Yeah. Hey, Chris. Well, great to be here with you and your audience. Maybe just sort of taking this one off the top, I would say we're looking at this a little bit skeptically. Novig is a great team. I know Jacob and the group there well. They're ramping quite quickly. They made a early pivot to Sweepstakes, and I know they've been going down the track on sort of licensing to kind of get set up for prediction markets. To me, it sounds a bit premature. There's obviously lots of rumor and hype in this industry, but we are investment bankers. We are active on another similar deal in this space right now, and I will tell you, these groups are looking at acquisitions. But there are a lot of groups in this space, traditional incumbents, that are looking at these deals. So I think everybody wants to get under the hood. It doesn't necessarily mean that transactions are always about to take place or there's a lot of substance behind it.
Sure. I mean, what separates, from your perspective, a deal that's probably going to happen compared to one that's just a lot of more hype than substance?
Yeah, I mean, listen, it ultimately comes down to what you're selling and what's in market. And I think, some of these groups that we do speak to regularly, whether it's the Kalshis or the Polymarkets or other groups that are looking to, enter this, white hot vertical, they're looking for technology. They're looking, okay, how proven is the product? Has it been built? How far along are you on the DCM and other sort of application processes? How much certainty do you think you could receive a license? And really, have you developed this? Are you operating in other regulated markets? So there's a lot of factors that go into this calculus. The punchline is these groups, particularly given that the capital that has been raised recently and the money flowing around from mainstream investors, is that they are sitting or going to be sitting on war chests of capital to acquire and scoop up the things that they are going to need to continue to compete and scale as this market unfolds.
That makes a lot of sense. And if the Novig rumors end up having merit, I am curious what your thoughts are on their recent $18 million raise being a bridge to fund negotiations until there's a deal closing.
Yeah. Well, I don't think, just sort of playing devil's advocate or maybe taking a contrarian view. Listen, the space is active. There's obviously been rumors of, Profit X raising another round to scale. That's another business that's sort of in the same geography and zip code, doing similar things. They've been
Another
around
sports
for a long.
exchange.
Right. They pivoted from being regulated in New Jersey. I know that group quite well. Typically, I don't think an investor say, hey, we're going to fund you or bridge you $18 million with an immediate, exit, months later. So I think, if you're the Novig team, you're trying to run this business as a standalone for as long as you can. Doesn't mean that they may not be for sale a year or two from now, because if I was in their shoes, I'd be waiting till I have my DCM licenses to, or really good line of sight on that. And then obviously the valuation can potentially enhance, 10x, whatever numbers they're looking at. And I think, listen, a lot of the buyers that we speak to are going to be focused on earnouts because, these businesses are still early stage. There's a lot of moving parts, and you're not necessarily going to receive, maximum valuation day one.
Right. So they're waiting, or Novig, or some of these companies that could be looking to be acquired, they're going to be looking for ways to enhance their value and actually run the business. You're not going to convince an investor to just shell out, tens of millions of dollars to fund your negotiation.
Yeah, I think that's fair.
Yeah, that makes a lot of sense. And then in these acquisitions, obviously the company would then belong to the acquiring company, probably one of the large prediction market platforms. Um, how do the investors compare to the founders come out of this? How's the breakdown of preferred stock change in some of these deals?
Hard to comment without seeing sort of the specific mechanics around these transactions. All this is all obviously,
Hmm.
private information at this point.
Right.
Um, I think what's really unique though, just maybe just switch gears a little bit, what's unique
Sure.
about the space versus, the other kind of great phenomenon 9 months ago or a year
Mhm.
ago, which was the sweepstakes market, is you are really seeing mainstream traditional venture capital. You've obviously seen some household, Silicon Valley venture capital funds invest in some of these deals recently. You obviously have the ICE investing in
Mhm.
Polymarkets very recently. So I
Mhm.
think there seems to be some real traction and confidence that this is going to be a sustainable business line. Love it or not, it's
Mhm.
probably here to stay. And these traditional venture capital firms probably would not invest if they didn't feel comfortable about some sort of regulatory certainty for at least the next 3.25 years.
That sustainability is interesting. So, for the prediction market folks who aren't coming from the gaming side, sweepstakes, can you just describe how there was this great enthusiasm for sweepstakes even as quickly as a year ago? And this year, we're already seeing major states like California outlaw the model altogether.
Yeah, I mean, so sweepstakes is still a substantial business. We know many of
Hmm.
these groups quite well. Some of them are more diversified than others. Some are in gaming products. Some are obviously in traditional sports products. They've also raised a fair amount of money. Some of them are sitting on cash. So you wouldn't be surprised. Some of these groups are looking at this prediction markets asset that we're selling
Hmm.
right now to make a pivot to diversify. But yeah, the sweepstakes concept has been around a long time. I'm almost 50 years old. So I remember when I was a kid growing up watching, the Epic Man Publishers Clearinghouse sweepstakes. But yeah, sweepstakes basically was able to, let's just say bastardize some
Hmm.
laws around sweeps to create this sort of digital product. And there's been a significant pushback from a lot of the traditional land-based incumbents. Right? If you're Caesars or MGM or Penn National Gaming, or even really other, you're the new incumbents, your DraftKings or FanDuel, you're not super psyched about, hundreds of millions of dollars of top line being sucked
Hmm.
out of your business theoretically from the sweeps product. So there's been quite a pushback against the space. You're seeing sort of the first domino fall in California that will likely shutter or significantly curtail this business. And I think, we'll see how quickly those dominoes fall. I don't think it'll be as quick as people think, but
Hmm.
the expectation of the prevailing wisdom in the investing community right now is that, it'll be California and Texas and Florida and
Hmm.
Georgia, and
Right.
that ice cube will melt, fairly rapidly. But again, it's not going to go away tomorrow night.
Right. Um, And then do you know what makes investors so sure that prediction markets are going to be this much more sustainable business model? And whether that's included in sports or whether they're wary about sports compared to some of the other topics?
Yeah, I mean, listen, I think we're in that sort of go big or go home phase. This feels
Hmm.
very much, like again, early.com world that I kind of started my career around in that kind of the
Yeah.
late 90s, early
Hmm.
2000s. It feels very much sort of the ground that Uber and Lyft were breaking, call it 15 years ago of just move fast, break things and worry about it later. But when you've got sort of the air cover of the current administration, you've got 47 Junior on Kalshi's board. It feels like this is going to be sort of a protected asset class for a while. And, even if there is an administrative change down the road, I think the business is going to get to a big enough scale where it's sort of, difficult to put the genie back in the bottle. I mean, I've been around gaming for almost 30 years. I've seen a lot of form factors in this
Hmm.
industry where very rarely does gaming go away. And listen, we don't have to look that far back to kind of the early days of, DraftKings and FanDuel when, I used to live in Hoboken, New Jersey, and, you would just
Hmm.
walk down to the train station, and the entire train station was slathered with DraftKings advertisements, and it was all about customer acquisition. Obviously, they took their licks, from the New York State Attorney General at the time, and then
Mhm.
now they're one of the biggest companies, in the gaming industry in the world. So, this is sort of the nature of the beast in gaming. I think what's obviously very different, this time around is this
Mhm.
is, federalized sports betting. And again, I'm a traditionalist. I've grown up where you go through your licensing in New Jersey or New York or
Mhm.
Louisiana or Mississippi. You go through your background checks. You get your entire team, essentially, and your investors through licensing. This is a different animal, and I think it's going to be very, very dynamic in terms of the regulatory environment and what unfolds in the next couple of years.
It makes a lot of sense. I want to zoom out to the prediction market industry from a pretty high level, and you know, what do you think the shape looks like, or what do you think the acquisition wars between Kalshi and Polymarket could look like? What does the industry begin to look like once they begin, buying all their?
Yeah. Well, I mean, listen, it's great for investment bankers. It means that
Mhm.
we're going to be pretty
Yeah.
busy with transactions. I think, listen, you're going to have these companies who have a war chest of capital to invest, and they're doing this sort of internal calculus of buy versus build, right? I mean, if you're going
Mhm.
to build out different feature sets, right, does that take you 3 months, 6 months, 9 months, 12 months? And again, in this world where things are moving so fast, right? I mean, you think about prediction markets. This is a backwater before the last year's election.
Mhm.
Yeah, this is really an also ran in the gaming sector, and so a lot has changed in, call it, a year,
Mhm.
and a lot could really unfold quickly. So if you're, one of these big platforms, it might be easier to acquire a team, much the way you're seeing in sort of the AI arms race with the traditional,
Mhm.
incumbents, whether it's Meta or Google, just going out and acquiring, kind of fire sale as much team and talent as they can bring on. So I
Mhm.
think it's great for those. I also think it's really good, those groups and all this. I think it's great for the teams, again, whether it's a Novig or a Profit X, where somebody's been able to pivot and has really
Mhm.
kind of built the underlying technology. It's certainly going to create some scarcity value for those groups as well.
Yeah, absolutely. So, what do you think the competitive landscape looks like after a few years of Polymarket and Kalshi acquisitions? When I mean, there can only be so many startups who are able to compete or even find a small
Mhm.
niche in the market when
Sure.
Kalshi and Polymarket are out shopping.
Yeah, I mean, listen, it's going to be at the end of the day, product wins. And I think,
Mhm.
there is a risk of the industry becoming highly commoditized and everybody essentially offering the same product. So whether you can offer differentiated sort of UI UX,
Mhm.
different types of betting formats, I think you're going to see a lot of creativity around other gaming form factors. I wouldn't be surprised down the road to see some sort of lottery prediction product.
Mhm.
So like, where does this go from an evolution of sort of, okay, winner, who's going to win or lose tonight's,
Mhm.
football game versus something that's really differentiated and nuanced. So it's ultimately going to come down to the quality of the product. I also think, when you've got the Robin Hoods in the space and people that are saying, you know what, I can use this predictions product as a loss leader, and I've got Chris or Joel's deposits on hand now, and I can cross sell
Mhm.
them a credit card or a business checking account or financial advice. This becomes sort of a loss leader, and it's probably less about the gambling. I know it's not gambling, but I think this becomes about sort of the holistic kind of lifetime value of the customer.
Sure. I mean, I know. I mean, even sports contracts now on Kalshi are a great customer acquisition tool for them.
Absolutely, and I think again, I'm an old school guy. I've got my traditional Fidelity and Charles Schwab accounts. I haven't gone down the rabbit hole too much on the product. I've certainly tested
Mhm.
these out, but again, I think if I was call it 10 or 15 years younger and I had a Robinhood account, this is just another product that I'm accessing on a daily basis. I'm checking my accounts and buying different shares of
Mhm.
of Chipotle or Starbucks in my investment account.
Sure. And you mentioned, the possibility of like a lottery prediction market or some more explicit crossover between traditional gaming and the newer prediction market model. How does the regulatory risk of, say, a slot style prediction market company crossing the CFTC's line and leading to some new, more unfavorable regulations in maybe 3 to 5 years? How does that affect risk in the industry, or is that being priced in now?
It's probably not being priced in right now. I think there is certainly some expectation that, again, the product and the form factors will evolve. But again, I think, listen, the traditional gaming industry is very deep pocketed, sitting on lots of cash, cash rich. I think most folks are pretty, joined at the hip and saying, hey, we don't want to get Kmarted or Sears. This is potentially existential risk. And, we want to obviously protect our turf. And more importantly, because as it stands now, at least my understanding with these, predictions products, like the federal government's really not making a whole lot of money off this, right? This is gaming is a substantial tax revenue generator for states, right? If we start cutting, hundreds of millions, if not billions of dollars out of the social programs and other, enterprises where this tax revenue goes, this is going to really pinch states. You're seeing them push back. You're seeing them kind of, stand up to the industry and kind of try to protect their turf. And then, when you compound, again, I'm throwing out lottery, like lottery is an absolutely massive tax generator for states. It pays for a lot of senior citizen programs, where we all know about the federal cuts that are going on right now. And I think they're going to protect their turf and try to figure out ways to curtail it. So I think the predictions industry needs to be very careful to stay in the relative lane that they've tried to carve out for themselves. I also, listen, I've been around gaming for a long time. I think everybody that's been in this industry for a long time wants this to be a sustainable, healthy business, does not want to create a situation where we're really creating problem gaming, or we're sort of sending false messaging on sports betting versus investing, right? Like, I'm a traditionalist. I grew up reading a lot of Warren Buffett books and financial textbooks. I'm a suffering Jets fan, as most people know. I don't think you want to take your 401k and put it into the Jets, winning this weekend. And there's obviously a lot of very negative social consequences that could come from gaming. And I think we all, whether you're a traditional company or you're one of these fast moving companies, you need to be respectful that we're not going to create some sort of problem gaming that ultimately gets this industry really clamped down or shut down or significantly curtailed, like we saw in Europe. And there's a lot of case history of what can go wrong when you're over promoting this business.
Oh yeah, over in Europe, they've banned everything from celebrities to, they've put some pretty heavy restrictions on even the advertisements that would probably surprise American audiences who are used to seeing, Kevin Hart in the DraftKings commercials.
Correct. And really nobody should want to see that happen. That's sort of the draconian nightmare that we could all see if one day, the far extreme, let's say religious right, gets control of government and says, what, no more gambling anywhere. Maybe we could do church bingo. So, right. Again, I'm trying not to go too far down the rabbit hole, but you can see how this could go wrong if it gets to the polar extremes.
Yeah, that makes sense. And then getting back to some of the startups who could be acquired, is there there may not be a straightforward way to do this, but can you kind of tease out what a company that is looking to be acquired might look like compared to one that, really wants to carve out a niche for themselves, even if Kalshi and Polymarket, become the main duopoly in this industry?
I sort of alluded to already. Again, there's groups out there that have, built tech stacks in the space that really could be plug and play. Maybe Polymarkets and Kalshi are kind of good. They've obviously got a war chest of capital now. They could build things. They could just throw a ton of resources at it and try to pull up, the speed to market or, execution of these new features and product types. But I think it certainly creates an environment where anybody that's been on the fringes of it, could potentially, raise capital now at accelerated rates. There's obviously a lot of AI washing going on in Silicon Valley now. There's plenty of skepticism, but there's lots of, groups that we talk to on a daily basis, particularly, let's say, some of the DFS plus companies, whether it's a better or an underdog or a sleeper. Obviously, they've been trying to get through their licensing, who are well capitalized, have substantial investors behind them. They probably have the means and methods to fairly quickly pivot into this vertical, turn some of their resources internally into building out these product types. And I wouldn't be surprised to see some of these groups try to pivot fairly quickly and say, hey, we're going to be an omni-channel, multi-strategy, gaming app. No different than, again, Robinhood saying we're going to be kind of a financial market, financial supermarket. I think the consumer at the end of the day really doesn't care, what's going on for a regulatory environment. They just want to get a bet down. And if they have to, kind of open up their phone and they're on, XYZ app and it's toggle over here to DFS plus, toggle here to OSB, toggle to prediction markets. I think that's really more important than they're not really as deep in the weeds as we all are that are in this business on a day-to-day basis.
Sure. And what kind of deal terms should we be paying attention to once these acquisitions begin happening besides just the sheer dollar amount?
Yeah, I mean, listen, you're going to generally see a decent composition, let's say 25 to 50% of the compensation in cash upfront. The remainder is going to be, again, heavily centered around earnouts with probably some cash component, more likely some equity to really align you as the founder or your management team with the company. And in addition to, some expectation of you sticking around for several years and trying to also making sure there's sort of non-compete, right? You don't walk out the door with your team a year after a deal gets done. So that's typically how it works. We actually had an interesting piece. It was better lucky than smart sometimes. We published a primer on earnouts about a month ago or a little over a month ago. Is the day that the Prize Picks transaction was announced to all win. So anybody who wants to read it, it's on our website, xcapital.com. It's in our ideas section, and it's a good primer and understanding of how earnouts work.
Nice. Yeah, we'll be looking forward for sure. And as we wrap up, I do want to ask about could a change in administration and an administration that's maybe more focused on guardrails and just innovation in the financial space, how would that potentially affect acquisition deal flow once this begins, or does it at all?
Well, I mean, listen, we've got call 3+ years to the next election. And I think, listen, the world can change a lot, whether it's 3 months or 3 years. I think for the next, let's say 2 years or so, it's going to be a robust environment in this space. Obviously, heading into the next presidential election, 2028, maybe that causes people to kind of pump the brakes. But, who knows? This vertical could be, 10x the size of it in 3 years, hypothetically, or it could shrink. I think it's sort of a boom or bust situation here. My expectations is this product type is going to be here for the foreseeable future. It's kind of all we know at this point.
Okay, that makes sense. So just using politics to try and predict is a failed game in all likelihood.
Exactly.
That makes sense. And what what do you think the prediction market industry looks like in 3 to 5 years, once we're past the .com kind of mania phase, and after we've done the industry contraction that follows? Where do you think we roughly end up?
Great question. I mean, again, assuming there isn't substantial regulatory pushback or some sort of nuclear scenario like what's going on in California with sweeps, this is probably, call it 25% of the digital sports betting arena. I mean, it could be, a massive space. I think we'll obviously have to see how that unfolds. I do think there will be more than the kind of 2 players that are sort of household names that are showing up on, episodes of South Park. So it'll potentially be a much more diversified space. Hopefully, I think, these kind of more dynamic, younger founders running these companies will hopefully pay attention to kind of history and kind of what's gone on in the gaming industry in the past, as well as other, technology sectors to avoid some of these pitfalls. So, there is always the risk that the industry is seeing inflated valuations, but, that's sort of the nature of the beast, right? When you see, you talk to venture capital firms, they certainly understand this is a high risk, high reward situation. If you're a good VC investor, you just need one or two, moonshots to sort of offset the, 8 or 9 that are zeros. And I think that's just sort of the nature of the beast. But, I think what is different here is you certainly have some really mainstream venture capital entering the space, which adds, a lot of credibility and legitimacy to these players and the category as a whole.
When you say there could be a more diversified competitive landscape there beyond Kalshi and Polymarket, what do you still envision those two in a more dominant position, or are you seeing somebody like maybe Limitless, Melee Markets, one of the new crypto prediction market platforms, really carving out a substantial piece of the market for themselves?
I mean, listen, that's a great question. I mean, we certainly talk to folks like stake.com. We catch up with VGW. I mean, there are other people that have been in the crypto world that may see this as an opportunity to pivot into this landscape because, they're probably thinking, gee, this actually, I know this is sort of, this seems kind of crazy, but the federal regulatory environment may be more simplistic than getting a license in Nevada or New Jersey, where we're sort of the boogeyman. So they may be seeing this as an opportunity to enter the space. And listen, the thing I love about this space, and we're exclusively focused on the digital ecosystem, is there's always some person that's got a great idea, and they might be in their dorm room, they might be in their garage tinkering with this idea. There's always somebody coming out of the woodwork with a really interesting idea and form factor. And I think we're just going to continue to see a lot of innovation. And for someone like me that's been around the space a long time, it's really just exciting to see, all the pace of change and just the really cool ideas that are popping up. I think that's what's really unique about this vertical is the change and velocity of change has been nothing like anybody's ever seen.
Yeah, it's been absolutely stunning to watch, even as a reporter. But Joel, thanks so much for joining us this morning and for stopping by. Where can people find you and follow you if they want to catch up with your thoughts on the industry?
Yeah, I'm all over LinkedIn. You can just kind of look me up over there. We're also, again, you go to our website, xcapital.com, XST Capital. We are publishing a CEO interview series that's caught a lot of wind. We've probably publishing 25 episodes of that now. That comes out pretty much every month. People can subscribe directly on our website.
Wonderful. We'll all watch for it. Thanks again.
Thanks, Chris.